Welcome to the deep dive. Today we are really getting into cryptocurrency, this world of digital money that uses, well, some pretty complex tech cryptography to keep it all safe.
Yeah, it's a fascinating area, and it's changing so fast. The whole idea of money that's just digital, it grabs you, doesn't it?
It really does. And look, our aim today is simple. Decode this complex world for you. Whether you're totally new to this or maybe you've already dipped your toes in,
hmm
we've looked at a bunch of different sources trying to piece together a clear picture of what crypto is, why it's, such a big deal now, and maybe where it's headed.
Exactly. Trying to cut through some of the noise and just understand the fundamentals.
Okay, let's dive right in then. Fundamentally, what are we talking about with cryptocurrency?
Well, at its core, like you said, it's digital money, virtual cash, if you like. The
Yeah.
key thing is the cryptography. That's the security layer. It protects transactions, controls how new coins are made, all that stuff.
Okay, so how's that different from, say, the money in my bank account, my pounds or dollars?
Okay, that's the big difference. Normal money, what we call fiat currency, is controlled by central banks, governments. Think Bank of England, the Fed.
Right.
Cryptocurrency, well, most of it anyway, is decentralized.
Yeah.
So there's no single boss, no central authority. Controls spread out across a whole network of users.
Decentralized. That sounds, well, pretty radical compared to how money usually works. Now, Bitcoin. You hear that name constantly. Where does it fit in?
Bitcoin's the original, the
Oh,
OG, you could say. It popped up back in 2009, created by this mysterious person or group, Satoshi Nakamoto.
Still nobody knows who that is, right?
Still a mystery. But yeah, Bitcoin basically started it all. It provided the template.
The first domino. And since then, it feels like thousands of others have appeared.
Oh, definitely. We call them altcoins, alternatives to Bitcoin. You hear about Ethereum, Binance Coin, Solana, Cardano. The list goes on. And each one often tries to bring something new to the table. Different features, different purposes.
Okay. I think I'm getting the basic what. But let's shift to the why. Why are people so interested in investing in this stuff? What's the pull?
Well, there are a few big drivers, I think. That decentralization thing we mentioned, that's huge for a lot of people.
The idea of not having a bank or government in charge?
Exactly. The idea that you have more direct control over your own funds, that resonates.
I can see that. What else?
Then there's the limited supply aspect. Many cryptos, Bitcoin being the prime example, have a hard cap. There will only ever be 21 million Bitcoin, for instance.
Okay.
So because it's finite, some people see it as like a protection against inflation. A bit like digital gold is how some frame it.
Right. If supply is fixed and demand goes up, the value could potentially increase. Makes sense.
Potential is the key word there.
Yeah.
And that leads to the next point. The potential for, well, pretty high returns. Let's be honest, the market's seen some crazy growth phases.
Yeah. You see those headlines. Huge jumps.
Absolutely. And that attracts investors looking for that kind of growth.
Right.
But, and this is a really big part, it comes with massive volatility.
Okay. Yeah. The flip side, prices can swing wildly.
Wildly, up and down. So high potential reward, definitely high risk. And beyond the money side, there's the technology itself.
Ah, the blockchain.
Precisely. Blockchain technology is what makes most crypto work. Think of it as a shared, transparent, unchangeable digital record book, a ledger.
Okay.
And its potential uses.
Yeah.
They go way beyond just sending money. People are exploring it for tracking goods and supply chains, verifying identity, voting systems, all sorts.
So the tech itself is a big part of the excitement and the investment, not just the coins.
Absolutely. It's seen as a foundational technology for, well, maybe a new version of the internet even.
You mentioned the risks, the volatility. Can we unpack that a bit more? It feels important.
Oh, it's crucial. You absolutely have to understand this is a high-risk market. Prices can plummet just as quickly as they can soar. And it's influenced by, well, everything. Market mood, news about regulations, tech breakthroughs, even, tweets sometimes.
Okay.
So yeah, it's really not for everyone. And the golden rule is only invest what you can genuinely afford to lose. Seriously.
That's probably the most important piece of advice. Don't bet the farm. Okay, looking forward now, say to 2025, what big trends are shaping crypto right now? What should we be watching?
There are a few key things happening. One, big one is more institutional adoption.
Meaning big companies, banks.
Yeah, exactly. Big investment firms, major companies, even some banks are getting more involved. They might be offering crypto services to their clients or even holding crypto on their own balance sheets.
Yeah.
That's a shift towards, the mainstream.
That feels significant. Moving from the fringes towards the financial establishment. What else?
Something else that's really interesting is central bank digital currencies, CBDCs.
Okay, what are those?
These are basically digital versions of a country's actual fiat currency. So think a digital dollar, a digital euro, a digital yuan. Governments and central banks themselves are exploring this. China's quite far ahead. The EU is looking seriously at it.
Huh. So governments creating their own digital money. How does that fit with the decentralized crypto we were talking about, like Bitcoin?
Well, that's the million-dollar question, isn't it?
Yeah.
CBDCs would still be centralized, controlled by the central bank. So they're fundamentally different from something like Bitcoin. How they'll coexist or compete. That's going to be fascinating to watch.
Yeah, definitely something to keep an eye on. Any other major trends for 2025?
We're also seeing continued growth in DeFi, decentralized finance.
DeFi, sure. Right.
Yeah, this is basically trying to rebuild traditional financial services, lending, borrowing, trading, insurance, but using crypto and blockchain. So it's, open and decentralized. No middlemen, theoretically.
Okay. And you hear Web3 mentioned a lot too.
Exactly. DeFi is often seen as part of the bigger Web3 idea, which is sort of this vision for a new phase of the internet that's more decentralized, gives users more control over their data, their online identity, often using blockchain and crypto tokens.
So building new kinds of financial tools and internet platforms on top of this tech, that sounds ambitious.
It is very ambitious.
And then, of course,
There's regulation.
yeah,
Always
there's-
regulation.
Yes, the big question mark.
Always. Governments everywhere are grappling with how to regulate crypto. They want to, protect consumers, prevent illicit activity, ensure financial stability.
Sure.
But how they do that without stifling innovation, that's the tricky part. Clearer rules could bring more stability, maybe more confidence. But the wrong rules could push activity elsewhere or hinder development. It's a massive factor for the future.
Okay, that's a lot to take in. So imagine someone's listening, they're intrigued, maybe thinking about getting involved. What's the essential advice? Where do you even start?
Number one, absolutely number one, do your own research. DYOR, as they say in the crypto world.
Don't just jump on a trend you saw online.
Please don't. Don't buy something just because someone on TikTok told you it's going to the moon. Try to understand, what does this project actually do? Who's behind it? Does it solve a real problem? What's the tech? Read the white paper if you can handle it.
Okay, solid advice. Research first. What else?
Start small. Really small, given that volatility we keep mentioning.
Only invest what you can afford to lose.
Exactly that. Only put in money that, if it vanished tomorrow, wouldn't wreck your financial life. Treat it as speculative, especially at the beginning. You can always add more later if you become more comfortable and knowledgeable.
Right, sensible approach. And what about keeping it safe? If you do buy some, how do you protect it?
Security is so important. You'll need a cryptocurrency wallet. These can be software on your computer or phone, or even little hardware devices. Use reputable ones. And critically, enable two-factor authentication, 2FA, everywhere you possibly can. On the exchange where you buy it, on your wallet, if possible. It adds a vital layer of security against hacking. And be very careful about scams. Phishing emails, fake websites, they're everywhere.
Good practical tips. Research, start small, prioritize security. Okay, so wrapping things up, it's clear cryptocurrency isn't just, internet money. It feels like a much bigger shift potentially.
Yeah, I think that's right. It's this convergence of finance, technology, even sort of social ideas about control and decentralization. It definitely has the potential to reshape parts of our financial world.
But that potential comes bundled with significant risk. That seems to be the constant theme.
Absolutely. Opportunity and risk, they go hand in hand here. Understanding that balance is just essential.
And because it's all moving so incredibly fast, you've got to keep learning, right? Stay informed.
Constantly. What's true today might be outdated in 6 months. It demands ongoing attention if you're seriously involved.
Okay. So maybe a final thought for everyone listening. As these big institutions get more involved, and as governments develop their own digital currencies, how do you think those two worlds, the traditional centralized finance moving into digital and the original decentralized crypto ideal, how might they actually coexist or collide in the future? Something to chew on.
Definitely something to think about. The next few years are going to be pivotal.
Well, thanks for taking this deep dive with us today. Lots to consider.